Hello and welcome, everyone. My name is Manzi, and I'm the moderator for today's webinar titled Digital Identity, How to Make It Work for Your KYC. Thank you all for joining us today. Before we get started, there are a few housekeeping points I'd like to cover. At the bottom of the webinar screen, you should see a toolbar where you can access a range of applications such as our speaker bios and some webinar materials as well. All the applications are resizable, so feel free to move them around to get the most out of your screen space. Please also submit your questions throughout the webinar via the Q&A box, and we'll try to get to as many as we can at the end of each session. For the best viewing experience, we do recommend closing any programs or browser sessions running in the background. Also, if you're having any technical difficulties, we suggest dialing out and logging back in, or send us a message via the question mark and we'll get to you as soon as possible. Lastly, we do value your feedback, so please complete the pop-up survey at the end of the webinar. So today's webinar will be split into two sessions. First, we'll have a panel discussion with our keynote speakers on the topic of digital identity, KYC, and past experiences with banks and regulators, and then we'll move into a presentation on Refinitiv Qual ID. We will have time for questions after both sessions, and we'll make sure to provide a recording of the webinar and slides to all the attendees as well. So without further ado, let me introduce our speakers for today. We have Daniel Kenny, who is the Chief Operating Officer for FutureVault, a fintech company based in Canada. Prior to joining FutureVault, Daniel worked for over 20 years with HSBC in Tokyo, Jakarta, New York, and Toronto. While he was in New York, Daniel managed a global transformation program to deploy effective AML and sanctions controls, working closely with regulators across multiple jurisdictions in response to a deferred prosecution agreement and consent order. Daniel, we're very honored to have you join us today, and welcome to the webinar. Could you share with us your initial thoughts on the topic and really just what you would like to achieve from the discussion?
Sure, and thank you, Manvi, for the introduction and having me here today. Well, I'm really looking forward to having a robust discussion about the transformation that is occurring in the financial services industry, and recognize that while this presents tremendous opportunity, having an effective eKYC strategy and AML framework is critical as the regulatory environment also evolves with this transformation. So I'm really looking forward to it. Thank you.
Excellent, thank you. We also have Marcelo Hiratsuka, who is the Global Director of Strategy and Execution regarding digital identity technologies. Prior to joining Refinitiv, Marcelo held senior positions at Barclays, Morgan Stanley, Citigroup, and HSBC, leading teams across compliance, technology, and banking operations. Marcelo, thank you so much for joining us today. What are you looking to achieve from today's session?
Thank you, Manvi. Thanks for having me today. Well, I think today I'm looking forward to cover eKYC in a more pragmatic way, if possible. I think people in this call have heard about, the theory. So as opposed to what it is, I think the audience will get most of our call, address some insights at a high level of how to, implement a eKYC program in the right way from the beginning. Thank you.
Sounds exciting. All right, so we'll start off with a quick question for our audience to understand where your organization is in the eKYC journey. So there are three options. So if you could go ahead and make your selection from the following. Are you considering implementing a program? Do you already have a program in place, but there are gaps identified? Or do you not have a program at all? So we'll just give everyone a few seconds to respond. We'll also have our panelists review the results at a later part of the discussion. All right, so we're getting a good number of responses. We'll just give everyone a few more seconds. All right. A few more seconds and we'll go ahead with our panel. Perfect. All right, so let's start off with our panel discussion. Daniel, I'd like to start with you. As you know, there has been tremendous transformation in the financial services industry with regards to digital identity. Could you share with us a broad snapshot of what we're seeing in the market today?
Sure. Well, the impact of COVID-19 has in many ways accelerated the need for digital strategies. Over the last, say, a year and a half of lockdowns and impaired business activity, market participants that were able to operate seamlessly in that environment actually saw their customer adoption and market share increase. Whereas those participants that were still operating in a more, say, traditional bricks and mortar model, they would have seen reduced activity in their traditional products and services. This has been exacerbated to some extent in that we have seen those same larger organizations actually pause their transformation programs over the same period, while smaller competitors accelerated their digital strategies, resulting in this kind of gap between the digital strategy haves and have-nots. And this is clearly evident in the rise of new fintech participants, increased trading volumes of cryptocurrencies and products like NFTs, and decentralized finance or DeFi platforms that are attracting significant pools of capital into automated market maker engines and the search for yield as an example. So as this transformation evolves, so too does the regulatory environment. You can make the argument that given the global impact of the pandemic and ubiquity of technology now, we are in a unique situation where these transformations are occurring faster and everywhere at the same time, unlike previous paradigm shifts. So regulations will evolve and firms will have to adapt their business models to ensure compliance. A couple of examples of changing regulations I can think of include, for example, KYC requirements on self-custody digital wallets used on DeFi platforms, right? The salient point here is that even decentralized protocols will have to demonstrate KYC controls on the digital wallet connected to the platform. Another example common in banking and entering the crypto space is the regulatory reporting of transfers exceeding $10,000 for example, to any other digital wallet that could, in theory, be located anywhere on the planet. So these regulations are adapting rapidly across multiple jurisdictions.
Thank you, Daniel. Those are really some great insights that you shared. So turning to you, Marcelo, based on what we've just heard from Daniel, how do you see the role of effective technology and compliance really coming together?
Yeah, well, that's a good point, right? I mean, let's start with the challenge, right? I mean, I think the problem, for all online financial institutions, including fintechs that are listening to us today, that when they onboard customers, that they must start with a basic compliance requirement, which is basically verify people's identity. Right? And unlike it, like the brick and mortar world, as Daniel mentioned, right? Of course, an online business must verify, people's identity remotely. So that will be, a challenge, number one. Number two, like most of the people in this call, if they haven't done so, they want to reach out global consumers. That's clear, right? And that's inevitable that at some point you need to expand your financial products globally. Competitors are playing globally, and it becomes hard to survive, just with the domestic market, right? I mean, to compete with tiny, thinner margins. You probably heard that, that some of the online brokers operate at zero margin. So you need the volume brought by global consumers. The good news is that technology is available to help you in the compliance space, right? So if you look around, and this is happening now, has been, rushed by the COVID. Digital consumers around the world, especially in the financial service, they open crypto accounts in the US, Hong Kong, and London, as Daniel mentioned, right? I mean, by just scanning their driver's license, they take a selfie, click a few checkbox, and there you go. I mean, they are trading immediately, right? And that's very interesting, very fast, right? But the question is, like, are they doing this correctly? I mean, are they based on a sound this way, right? I mean, compliance framework. And, like that's when the questions come out, right? I mean, can you guarantee that at least insurance individuals that are opening the accounts, they really exist, right? I mean, you don't know. I mean, they're all remote, right? I mean, are they really the ones submitting their own driver's license and not somebody else doing for them? Could be, right? I mean, somebody submitting someone else's driver's license. And that becomes, like one critical point, right? You have to identify that individual. And now to my second point on, like going abroad and reaching out to global markets, right? So let's say you're based in the UK, and how do you open an account for someone that is telling you that lives in Tokyo, right? And sends you a driver's license in Japanese? And worse, how can you ensure that the driver's license is really not fake, right? I mean, that's, like a crucial problem, right? So all this together, right? I mean, you can't wait for a day to check on the other side of the world if Marcelo's driver's license is legit or fake. So see, fintechs in business today, they don't open accounts in minutes. They won't survive. It's clear, right? I mean, and let's face it, if you can't wait for a day to do that. And like just as a final point, as people consider this eKYC framework, right? I mean, there are standards of information security that you have to follow, right? I mean, and it's not just GDPR. I mean, there are all cross-border, data privacy requirements that apply when you go, like global operations, right? So in a pragmatic way, like there are a few steps that you have to take, and these are, like just the tip of the iceberg, right? I mean, just the beginning. But there are first checkpoints that you have to take to start, let's say, a proper eKYC program, right? The problem, I mean, I think, unfortunately, there's no way, at least I don't know any way to actually skip these steps, right? I mean, unless, that there is a way to skip this process. I mean, I think these people are doing right. I really don't know. And Daniel, I don't know. I mean, if you are smarter than me, right? I mean, if you are aware of any way to actually, like do it in a faster way or in a smarter way.
Right. Well, thanks, Marcelo. But I think the short answer to your question is that there are no shortcuts. The good news, though, is, as you mentioned, the technology is getting much more flexible and easier to deploy. And given that backdrop we discussed, I would say that any organization that aims to operate across multiple jurisdictions should aim to implement the highest regulatory standard in their KYC and AML program. If not, there's always a risk that through regulatory arbitrage, nefarious actors can enter the financial system through on-ramps in either loosely regulated jurisdictions or through market participants that do not have effective KYC controls. And with the proliferation of stablecoins, those same bad actors can circumvent traditional AML or sanctions controls and the movement of tokens across borders. So the bottom line is that as a financial services participant, there is an obligation to strengthen the system against financial crime. The implications of failing to have effective AML or sanctions controls are numerous, and they can range anywhere from fines, curtailment of products or services, loss of a US dollar clearing license, which has ancillary impacts on correspondent banking relationships, for example. And in some cases, a deferred prosecution agreement is entered, and an independent third-party monitor is placed into an organization to ensure that remediation programs are implemented and a sustainable financial crime risk framework is in place to satisfy exit conditions. And by the way, you will have noticed that nowhere have I mentioned costs. The emphasis is on preventing financial crime, and in response to the costs argument, I would submit that an ounce of prevention is worth a pound of cure. So all that notwithstanding, and I don't mean to put a dampener on the webinar, if you get your KYC strategy right, there are tremendous opportunities emerging in the financial services industry, but they do not come without their own unique set of challenges.
Very well put, Daniel. So on that note, we do have another poll question for our audience, just in response to the challenges that you just mentioned. The question is, what are the biggest challenges to implementing an effective eKYC program? And the options are all-inclusive technology and data quality, compliance requirements, or really a combination of both. And I'm really interested to see where the audience is in this regard. And so we'll just give everyone a few seconds to respond from one of these options. right, we're getting a good number of responses through. We'll just give everyone a few more seconds to respond. Just a few more seconds. All right. Thanks, everyone, for providing your input. We'll take a look at those results at a later part of our discussion this evening. So broadly speaking, we are seeing some key trends across the board. And the first is, as Daniel mentioned, the most relevant for organizations really is around the impact of COVID and the need to balance lower costs and fewer resources while still keeping up with the tighter regulations. And all of that means, we need to really have greater operational agility and having processes prepared for increased scrutiny in a post-COVID world. We're also seeing a shift in terms of a risk-based approach to KYC and customer due diligence, which is holistic in nature and really just where the focus is rightly on the high-risk customers, but still making sure appropriate steps are being taken for the medium and lower risk customers as well, and also incorporating the cyclical periodic reviews that are based on the risk ratings, where a high-risk customer would warrant more frequent and in-depth checks. And these are just things that we just need to be aware of. And also a greater focus on digitalization, so on audit trails, moving away from paper-based processes to centralized, more digital solutions to be able to track and monitor activity across global operations. And really, especially in terms of efficiency, it's no longer acceptable to take months or weeks to onboard customers. So a solution that provides both the ongoing monitoring and real-time solutions is key, and really underscoring, Marcelo, what you mentioned earlier. So really the bottom line that we're seeing here is that regulators are increasingly looking at each of these components when they're assessing the effectiveness of a KYC program. And these are challenges that can be addressed with simplified processes and some automation as well. And so while we look at some of the challenges in implementing an effective eKYC strategy, there are some ways that we can address those strategies. So Marcelo, what are your thoughts on this?
Exactly, Manvi. I mean, it turns out to strategy, right? I mean, I do believe that, making this right at the beginning, you will, as Daniel mentioned, you will create opportunities, right? And again, I mean, it's not that it's going to drive opportunities, but it also can avoid a regulator scrutiny, right? I mean, that's like a fundamental goal. For example, like a DPA, nobody wants something like that. So Daniel, let's see if you can outline some points based on your experience, right, for a sound eKYC strategy.
Yeah, sure. Thanks, Marcelo. So as you say, I think that developing an eKYC strategy actually presents great opportunity to provide a modern, front-end user experience while integrating or even potentially demising legacy systems. Not only can an organization modernize their customer experience, there's a whole host of additional benefits that can be derived by having KYC data captured in a modern architecture. Benefits such as a golden source of customer data that enables on-demand generation of client lists, identification and governance over critical data elements that are propagated to downstream consumer systems such as payment systems, and even ensure compliance with other regulatory programs that recognize the importance of data, such as BCBS 239. With a solid technology platform, the corresponding processes and operating models can then be standardized and deployed at a country, regional, or global level, depending on the strategy of the organization. And finally, as we discussed earlier, given the rapidly changing regulatory environment, having that modern, flexible technology capability, that becomes an invaluable asset to the organization and will enable them to thrive in this competitive market that we find ourselves in.
Very well said, Daniel. And so we do have the results of our first polling question here, which is around the eKYC journey. I'm going to pass this over to you, Daniel. What are you seeing with the results, and are there any trends that are really standing out for you?
Well, we see a tie, and so I would say regarding the first component about considering implementing a program, I think it's the perfect time, and starting from a clean slate is very compelling. So there may not be any legacy systems to contend with and so on. but the proper design at the start of the program is critical and will enable the organization to navigate the competitive marketplace and regulatory environment. On the second point, that's what I would expect to hear, and those gaps most likely range anywhere from identifying the right third-party solutions, addressing legacy system integration, or observed gaps from audits or regulatory bodies. You know, each gap requires a detailed roadmap and holistic view of what the end design needs to achieve, but this result demonstrates the challenges that is pervasive with most participants in the industry, and they're not alone. Thank you, man.
Thanks, Daniel. We do also have the second polling question results here around the challenges of implementing an eKYC strategy. So, Marcelo, I'm keen to hear your thoughts on the results that we're seeing here. Could you share some of your insights and really where we're seeing the majority of the responses coming from?
Well, that was sort of expecting that one, right? I mean, by far, you know, like both seem to be very challenging, right? I mean, and I got that, right? I mean, Daniel and I both did this job, right? And kind of know, you know, like how complicated it is to balance both, right? But that's the golden point, right? I mean, you need to strike a balance, right? So both are quite challenging, and it's hard to take one over the other, right? Saying that compliance is more important or technology or so, right? And it's more challenging. They go side by side. I would suggest that, you know, in order to track them, right? In order, you know, like to play with them, you would, you know, like try to first address the compliance framework. I mean, having a sound compliance framework first, and then, you know, like you go over the technology challenges. And I do know that is not easy, right? I mean, I do know that this sometimes can be very complicated because, you know, like there's a lot of you know, groups coming together, a lot of resources trying to, you know, achieve what they want to do is the right thing. You need a strong people like Daniel, for example, right? A COO in the back to actually manage the whole thing, you know, like and coordinate, orchestrate the whole thing in the back. But it, you know, like it was sort of expected. Sorry. Thanks.
Excellent. Thank you so much, Marcelo, for that insight there. So we've been getting a lot of questions from the audience. So thank you very much for sending those through. We'll try to get through as many as we can before we move on to the next section. This one looks like it's for Daniel. There's a question asking, what are regulators really looking for in terms of the technology we need to set up? How do you quantify a budget when there are inherent risks, and how should we go about this?
Okay, well, in terms of the first part of the question, well, the technology needs to facilitate the effective capturing of accurate data and allow the organization to leverage that data throughout its entire operation. So as I referred to earlier, the significance of a golden source of client data, the ability to generate client lists, monitor the status of their onboarding journey or KYC refresh cycle, accurate data feeding transaction monitoring systems, name and payment screening systems, negative news systems, etc. These are all features that an effective AML program needs to deliver, and that's what regulators are looking for. In the second part of the question, in terms of quantifying a budget, that will clearly depend on the size and nature of the organization and the complexity of their technology infrastructure to integrate new systems if required. I'd emphasize that the budget should factor in the possibility to demise redundant or legacy systems as well, to give an accurate picture of total budget requirements of the whole project, which could be multi-year. In terms of how to go about executing this type of program, a risk-based approach should be taken to prioritize compliance across the client base, products and jurisdictions, and partnering with a proven vendor or leveraging the growing body of best practice available in the industry to develop a multi-year roadmap is also an option. So that's a great question. Thank you, man.
Thank you so much, Daniel, for the response there. We do have another question, and I think this one I'll give to you, Marcelo. How do you see fintechs and other financial institutions leveraging digital identity initiatives sponsored by the government?
Okay, sponsored by the government. Well, I have to say, right? I mean, I love this sponsored programs sponsored by the government, right? Digital programs is sponsored by that. Mostly because they're helpful, right? I mean, and intentionally they make people's life easier, right? And they digitize and digitalize, right? Both, process and also in a way, right, is good usage of taxpayers' money. The successful ones that I can, mention of, it's like Estonia, right? I mean, it's got a high rate adoption. I mean, something around more than 90% of the population has digital identity in Estonia, right? Which is fantastic, which is a great, indication of adoption, right? But I think on the flip side, especially for fintechs and, these companies, right? This sponsored by the government programs, they serve the domestic market, and they're not designed to identify non-residents. So back to my point, right? I mean, that was mentioned about going to international markets, right? So if fintechs want to reach a global consumers out there, I think this government-sponsored programs will solve just part of the problem, right? The domestic problem. So I would think that, fintechs would, should be looking for a more holistic solution, right? Something that will give them, the caliber to go out there and reach out to global consumers. But it's a great question. Thank you.
Thank you so much, Marcelo. We have time for one more question before we move on to the next section. This one I'll also give to you, Marcelo. My company has been going through a digital transformation program, including onboarding. What are the most important aspects of a digital identity implementation?
Right, that's a tough question. Let me give it a shot, right? I think I would touch on 2 points, right? And in this. The implementation, right? We're talking about implementation. So you've made up your mind that that's what you want to do, I'll think. So first and foremost, right? I mean, before implementing anything, make sure that you have a reasonable compliance program, right? I mean, a reasonable, eKYC framework. And it is interesting, right? Because in a framework, whatever framework you decide what to do or not to do, in a compliance level framework, you decide what you must do or you must not to do, sort of thing, right? So that's the first part that you decide, right? What, you must do or not. And there are a lot of compliance officers out there, very good, that will help you out to, give you good recommendations of how to actually implement a eKYC program or not, right? Without killing your business. And the second part of, the second part of, this implementation, et cetera, right? I would find the right technology partner, right? I mean, and what I mean by right, I mean a partner that will meet your global requirements, right? I mean, a partner with a global footprint that can help you and it's got experience in global markets. Right? I think the last thing that you want to find out is during the implementation, your partner doesn't come up with a good global support, but then that would be too late, right? So choose well your partner and make sure that your KYC framework is well established. That would be my 2. Hope I answered the question.
I hope so too. Thank you so much. Thank you both for your time and for sharing your insights. Really appreciate it.
Thank you, Mary.
We now have a walkthrough of Refinitiv's QualID with Sama, who is our regional risk specialist for customer and third-party risk at the London Stock Exchange Group. She has over 13 years of experience enabling businesses, helping them fulfill their AML requirements in Europe and the Middle East. We will have a few minutes at the end for your questions, so please keep sending them via the Q&A box below. Over to you, Sama.
Thanks, Manvi, for the introduction. Good afternoon, good morning, everyone. First of all, I hope that you are safe and healthy from whatever country you're joining us today. In the next 15 to 20 minutes, I'm going to be presenting the capabilities of our digital ID verification or digital onboarding solution, which is known as Refinitiv Call ID. So we will go over a few talking points. First, I'm going to go over some of the ongoing and recent trends in the digital ID space. And then we will talk about what would be a digital onboarding solution wish list look like. I know that you are joining us from different businesses, from different jurisdictions, and you have different requirements and regulatory requirements. So we try to find some sort of common grounds about what would be the wish list from such a solution across businesses. Then we're going to talk about the capabilities of the solution. So it's a multiple component approach solution. So we will focus on each component and talk about its benefits, so it can relate to your pain points and your fulfillment requirements. And then towards the end, we will close with a non-audio video just to show you how these components they work together in practice. So I definitely not going to, repeat what has been already discussed with my fellow panelists, but I think digital transformation is one that tops every business's calendar and strategy. Now, in terms of the digital transformation as it stands, it was on the business plan and the priorities for every businesses, especially like 60% of the world's GDP is going to be digitized by next year. Now, taking the COVID-19 pandemic, we can say that this is where the acceleration of that digital transformation took place. Now, it may have been in the speed of light, or let's say a speed that our businesses or any business was. Some businesses were able to cope, and others were left in need for guidance as how to deal with such such a transformation. So this is where we also witnessed some trends from intergovernmental organizations such as the FATF. So there was a guidance released last year in March 2020, and it was more about the when and the hows. So the FATF basically was guiding the governments, the financial institution, virtual asset service providers, non-financial institutions on whether to determine if they can use the digital ID as a verification tool for their business. And if yes for that, it's the how. So how would they first of all select that solution? So they highlighted on the efficiency, objectiveness, functionalities, and the hows relate to the integration. So how would you integrate such a solution in the customer due diligence program? So from the intergovernmental guidance and trends, we also shift to the government's directions in the digital ID space. So if I want to focus on the EU Digital Compass Strategy 2030, there are multiple targets in there, but the ones that relates to the digital ID are, like, I will mention two of them. So it's anticipated that 80% of the citizens in the EU will have a digital ID by 2030. And the public sector services, they will be all online by then. Now, we can think that this is a long shot to 2030, but actually the EU this month requested that the states or the member states, they sort of create that digital ID sandbox and framework and have it ready by September 2022. So if we take these trends and we sort of like think about them in terms of what would the business do what would the business think about a good KYC solution in line with all these trends, and at the same time think about the business requirements and what I call the care factor. So So putting that care factor is some sort of common grounds of what each business would request to have in such a solution. So the first C stands for comply. So basically, every business, irrespective of the industry, irrespective of the jurisdiction, they need to comply. They need sometimes to adhere to complex regulations. They need also to comply with certain recommendations, and at the same time, they need to modernize their policies, procedures, and controls to align with that speed of digital transformation. So a minimum eKYC or a KYC solution wish list would be that this solution would be as flexible, and it would also provide the efficiency and the risk-based approach, or addresses the risk-based approach of that business. The second pillar of the care factor would be the attraction, so attracting customers. So first of all, you as a business, you would definitely want to attract customers. Now, how do you want your customer to perceive your services or your onboarding experience? You definitely want the business or the customer to see see a positive, frictionless experience. So first of all, to distinguish your services or your onboarding journey from competition. And the second aspect that you would possibly think about it when you're attracting your customer is, am I attracting a criminal? Am I attracting a person on a watch list, or someone who's related to a company which is at high risk? Or am I onboarding a politically exposed person? So I maybe need to take some sort of procedures which are different than other customers. So the aspect here on the wish list for such a solution is to have that financial risk and financial crime risk mitigation factor during onboarding as well. And now, taking into account that, some customers, we have around like 1.9 billion people that are unbanked, for example, and we have a large population that they don't have official documents. So you as a business, you would probably think, okay, I want to attract customers, but I want to attract all types of customers, the ones with the ID, the ones without, the one with the digital ID, so I can maximize my market share. So possibly that in this case, what you would like to see in a solution or a wish list is that it's flexible enough and scalable enough to give you these these kind of fulfillments in order to support your increased market share in your business. Now, the third pillar, that is the retention. So basically, when you're onboarding the customer, from the time that they hit your dashboard throughout their journey, they may qualify at certain points in that life cycle to different types of verification. So you want to ensure that whatever solution you have in place, it's actually efficient enough and frictionless enough to maintain that positive experience throughout the customer journey. And this is basically what directly impacts a positive ROI for your business and keeps your customers with you rather than with competition. So the wish list here is having that ongoing frictionless experience with your KYC solution that is in place. And the last aspect is about the E, and the E stands here for expand. So basically, it relates to your business development. So one aspect of the KYC is to address the regulators or the regulators' requirements, and then the other aspect is for you to know what the customer like, which product, which service. So you would want to know, for example, if such a product can be successful in another jurisdiction, and if you want to do that, you want to expand to other jurisdiction. And irrespective, when we are talking here about a digital or a virtual type of onboarding or expansion of products, where you have the world as your as your playground, you would expect to onboard customers from anywhere in the world. So do you really want to, make those registrations redundant, or you want to maximize on that by having, a solution in place that would give you that trust that it's global and it gives you that global coverage? Basically, from the trends, from the business requirements and every journey or in every phase of your customer journey, there will be also arising threats and risks. Add to the mix that, criminals have become well-funded, well-organized, very creative in the way that they inject their illicit funds in the financial system, or in the way they are performing their money laundering techniques and fraud activities. So you basically, if you take the threats and you take the criminals and how they are well advanced now, and face that with vulnerable KYC technologies and controls in place, you will only maximize on your business's risks. So basically, and I'm sure that everyone attending now knows that, risks such as financial loss would be there, fines, regulatory enforcement, legal complexities, and the one that flies in a speed of light would be the reputational damage. So taking into consideration the risks, taking into consideration the business requirements, and as a market leader in the anti-financial crime and anti-fraud space, Refinitiv developed a Call ID solution, which is based on the API technology. So the type of solution here we're talking about is integrated, real-time, and automated. It's definitely built for a positive customer experience for your customers, and at the same time highly powered to prevent and fight fraud and financial crime. Now, it's based on different components, multiple components. We're going to discuss them in a bit. And these components, they can either be, utilized all based on your risk-based determination on the KYC and during onboarding, or it can be utilized in silos depending, again, on your requirements. So the first capability that I'm going to focus on would be the document authentication. So the document authentication would basically answer the question of, is this document legal? And if it is legal and official, is it fake or genuine? So basically, when your client hits your web dashboard and uploads that document, whether the document is a passport, it's an ID, or a driving license, the actual documents will be authenticated by a machine learning algorithm and validated against a global library of templates. And then there will be also up to more than 50 plus forensic tests that are authenticating the document to come back to you with a score that could be in your risk-based approach, a passing score and escalation score. So let's say the capability here has a lot of power in terms of technology, and the benefits that we have experienced from other businesses' feedback relates to the accuracy of the technology itself. And it helps because, again, in a global environment, you would, for example, one day, yes, onboard English documents, but on the other day, you will have to look into other languages, for example. And maybe the team that you have is not, is not qualified to read them, and therefore it ends up either by you investing more into training or investing in more resources that will be able to read these documents, or the choice of, okay, I'm abandoning these files because I cannot, authenticate them. So basically, the technology that sits behind it supports multi-language. So that's one capability there that's appreciated by business. And the second would be the reduction in onboarding time. So such a component or such a step will take a few seconds, where and especially when you have a large number of registrations to process their documents, authenticate them, you would need an army of people. And of course, there is a room for human error there. So that accuracy and the assurance and low cost is basically what we can say are things that businesses appreciate in this particular component. The second component that goes actually hand in hand with the document authentication, because I could possibly use Manvi's ID, but I will be Sama and I just upload it and the document will be genuine, but I'm actually stealing someone else's ID. So that's the The second capability that I'm going to talk about would be the liveness and facial matching. So this component basically answers two questions. Is this selfie matching the ID photo? And is this person's selfie representing a live person? Now, if we take a step back, this is basically when you ask your customer to interact with the technology in order to do all these winking and blinking and hold the passport and turn left and turn right and interact with the technology. And that's mostly when we heard from businesses that it brings them a high level of frustration at the customer level because most of the technologies, they don't work. And this is when the customer opts to other, to other providers that provide a more frictionless experience. So in particular with this component, there is something or an advantage, which is the passive liveness. Now, the passive liveness is when these checks that I've just mentioned, like the liveness and the facial matching, they are actually happening with no need of interaction from the client side. And it doesn't only provide that frictionless experience and positive experience, but it also help in preventing a spoofing attack. Because once you basically, or once the fraudster knows that the second step is for this person to wink or for this person to blink, then they kind of like, this is where they do these spoofing attacks. And this one would provide the passive liveness will not give those heads up, and therefore the checks will happen in the background. So it reduces also part of that spoofing activities. The third component that I will talk about would be the identity verification. Now, the identity verification, it could be done right at the beginning when you are onboarding the customer. And some businesses, they would opt for this component when, let's say, the account of the customer qualifies with a certain financial value, be it like when they start trading or betting or banking, and there's like certain threshold that qualifies that. And therefore, this is when they perform that identity verification step. Others, they would possibly use it as a waterfall for the document proof, for example, for the ones that they don't have documents, and they can use this as an alternative. But in any case, this component in particular answers also two questions. So first of all, if the person exists and if they are who they say they are. So basically, your customer will be hitting the web dashboard and they will key in their data entries like name, surname, date of birth, email address. And these components will be validated against the source. And therefore, you expect back a certain percentage in terms of rate, and that would be based on your risk-based approach and your determinations. It will be a success or an escalated onboarded file. So the things that are beneficial in terms of this capability would be the global coverage. And that's very important because some businesses, for instance, they operate on a local level or regional level. They invest in campaigns to attract customers, but at times they also receive customers from all around the world. So if they have the right component to verify these customers, they will basically have higher successful rate to onboard them. That's one. And the second thing is related to the flexibility. So some of the businesses would adhere to regulatory requirements on the verification type. So you have businesses that check only one source for the identity verification, and others they opt for multiple source. So whatever is your requirement here, there is flexibility to provide both for you in terms of verification. And it was like also like businesses that they were using the one source or one independent source verification. They found that selecting the multi-source is also increasing their successful rates and reducing their abundant files. So that's another aspect to mention to you about this component. And the most important one would be around the sources. So the actual sources that you are validating these attributes against would be trusted sources, such as governmental files, credit bureaus, residency files, and among others. The last component that I will be talking about today, which is part of the capabilities of the solution, would be the risk screening. So this is when we are checking as a business if this customer is listed somewhere, is at high risk, is he a PEP, is he on a watch list, is he related to a company which is sanctioned. So basically, this is the anti-financial crime part of the fulfillment. It's powered by WorldCheck data. Basically, the data is refreshed daily. So the benefit here is that whenever at any point during the customer journey that you want to onboard and run those types of screening, then you are sure that you're running the screening against the most up-to-date data of sanctions, politically exposed persons, enforcements, and adverse media. And of course, the coverage is global, and therefore it aligns with the whole, global business mentality that we are now operating with. I'm going to skip this slide and maybe show you a waterfall, which is just a potential waterfall. It was just a sample waterfall that we built for one of the businesses in the trading space. So basically, this is just showing you how the different components of the solution can help you in different stages of your onboarding journey. So basically, the requirement was here that we look at the first level is to look at the country. And we assess the risk at the country level. And then from there, if we identify that the country is at high risk, we're going to perform all types of verification, be it the document authentication, the identity verification. We top that with the liveness and facial matching, and then we run the risk screening. And if, say, for example, if the customer is onboarded from a low-risk country, then basically based on that, we have a different workflow or verification route for that. So it could be perform the document proof, and if that didn't work, we go for the identity verification, and then or vice versa, and then we top it with the risk screening before we successfully onboard the customer. So this is just a potential waterfall. It can be anything or anything because, again, businesses have different risk-based approach. They adhere to different regulations and they operate in different jurisdictions. So this is just a sample, but I wanted to share that with you so you can have a flavor of how these all interact, these components interact in a waterfall. And then now what I'm going to be playing is a video just to see how the actual tool work in practice. I'm just going to push in, I think. Okay, for me, I'm unable to see it. Okay. Okay. I think I can see it now. So basically, this is just an example on how the actual tool works in practice. So if I'm looking at it correctly, my screen is a little small. So here is first of all, you put in the customer keys in the phone number, and then they receive an OTP verification. Then they're requested to key in their attributes, their name, their surname, and their email address. And therefore, these attributes are being collected to be verified against the sources. This is the step where there is a request to take a photo of the document. Of course, there will be interactive messages to increase the clarity of the document when your customer is uploading it. This is when the OCR collects the information. A selfie is requested. This is when we are doing the selfie or the liveness check and the facial matching check against the photo and the liveness features. And this is where the person is requested or the customer is requested to key in the address, and that's also verified against the sources. And this is where all this is like heads up of what's happening in the background. We've done also the risk screening, and this is like the final verification of the application. And voila, it took 1 minute plus to get all these components and onboard the customer. So thank you very much for tuning in. I hope the presentation was insightful. And now, if all is good, I can hand back to Manvi.
Excellent. Thank you, Sama. That was a very, very useful presentation and a lot of really good information you shared there with us. We do have a few minutes left, so there are some questions from the audience for you. The first one is, can we get some insights about the data storage and where is it kept at your premises?
Okay, thanks, Manvi. That's actually a very good question. I probably didn't mention during my presentation, but the API here that we're talking about is basically operated at zero footprint, which means that from our end, we do not keep or store any of the data. So that's just to adhere to the privacy, and we don't hold any personal or any personal identification information of the customer.
Great, thank you. There's one more question. What sort of integration time are we looking at to utilize all components of QualID and integrate with our workflow?
Basically, for example, the waterfall that I just shared with the audience is something that we worked on, and we completed the full integration with all the testing in just 3 weeks. So in practice, if the development team is there from the client side, it wouldn't take more than 2 to 4 weeks max to have the integration done up and running.
Perfect. Thank you very much, Sama, for those answers and for your time today. That is all that we have time for today. So a big thank you to all of our speakers and to the audience for all your great questions. We will be reaching out to those of you that we couldn't get to during today's session, so don't worry about that. Please do take a few moments to fill out the survey at the end of the webinar, and have a wonderful rest of the day. Thank you very much, everyone, for joining us today.